According to a recent Bloomberg report, wealthy families have stashed over $300 billion in Roth IRAs. And how do we know that this is wealthy families? Because Bloomberg says this $300 billion is just for accounts that have a balance of over $5 million. That's a staggering number. Yet, only 8% of Americans are putting any money at all in any type of IRA. The only exception to this is really millennials. Turns out millennials are opening, according to Fidelity, millennials are opening up over 80% of all new Roth IRAs, and they're putting 75% or more of their retirement contributions. They're deciding to make these in Roth IRAs. So what do wealthy people know? And what do young people know about Roth IRAs that maybe you and I can learn from? Let's go for a walk, and I'll share some things. The Roth IRA is super powerful, and most importantly, I want to share with you how you can become a Roth IRA millionaire as well. But let's start with, why people are putting so much money into their Roth IRAs. You don't get a tax break when you put your money in a Roth IRA. It's what I call a tax me now account. You take your after-tax dollars and you put that in your Roth IRA. But here's what wealthy people know, and here's what young people know. Wealthy people know that there's no required minimum distributions currently for a Roth IRA. So if you've got $5 million in a regular IRA, and let's say the government, your life expectancy at some point is 10 more years. Essentially, this is just a high-level guideline, but essentially your required minimum distributions is the inverse of your life expectancy. So if you have 10 years to go, the government says roughly, we want you to take out 10% of that each year. Well, if you're a wealthy person and you got $5 million in a regular IRA, that's $500,000 in ordinary income that you're going to have to recognize, and your tax rate on that could be quite high. Full in, it could be it could be over 40%, depending on what state somebody lives in. And with all the other taxes, the Affordable Care Act, surcharge, things like that. So that's what wealthy family knows. That they know that they want tax-deferred growth. They know that they want to avoid required minimum distributions, and they know they want to. It's a great tool, estate planning tool. It's a great tool to leave for your kids, right? So that's what wealthy family knows. But that applies to us as well, right? If you've got $1 million IRA, again, the math is the same. And the government, the actuarial tables say that you have a 10-year life expectancy. You're going to have to take out 10% of that. On $1 million, that's $100,000. And that's all going to be taxable income for you. So you can piggyback off of the wisdom, off of the knowledge, frankly, off of the army of tax attorneys that wealthy people can afford, and say, okay, if it makes sense for them, maybe it makes sense for me. Now, I have to say, I don't know your situation, right? So this is not tax advice. I'm not telling you to do this, but I'm saying it should be on your radar screen and you should think about it. Okay, but why are young people doing this? Why are young people opening Roth IRAs? Because there's very little downside for them. With the regular IRA, because you got the tax break on the way in, right? You got to defer that money and basically make it look from the government standpoint like you did not earn that money, right? You got the tax break early. It's what I call a tax me later account. And for young people, if you're 30 years old or 35 years old, not being able to touch that money until you're 59 and a half without paying a penalty, and of course, paying ordinary income tax on it. For young people, if they put their money in, for you and I, if we put the money in, our contribution in a Roth, you have access to that money, just your contribution, not your earnings. If you take out your earnings, you're going to get taxed on that, and there's going to be a penalty on that if you're below 59 and a half. Again, not tax advice. I'm not an accountant. You should have your own accountant, but that's what young people know. So bottom line is there's a lot of advantages to having a Roth IRA. if you don't have a Roth IRA, let's talk about how to get you going in one, and how to set you up where there's a good chance, there's a decent chance, there's a chance that you could end up with over $1 million in that account. So if that sounds good to you, if you're enjoying this video, do me a favor, hit the like button, leave me a comment, and if you watch my videos regularly, if you enjoy them, think about subscribing. And with the comments, I really do enjoy reading your comments, so take a second and let me know. Okay, so one of the negatives with any IRA is there's limits to how much you can put in an IRA. And for 2023, that limit is $6,500 for people that are under 50, and there's a $1,000 a year catch-up provision. So for an individual, you can put $7,500 a year in if you're over 50 years old. Again, look all this up, double check these numbers, but you know, that's what I'm sticking with. Okay, so it's got a lower limit. So that's one disadvantage. And then there's also an income limit. If you make above a certain amount, and for people that are married filing jointly, that number is $218,000 in 2023, and it starts phasing out there, and it phases out very quickly at $228,000 for somebody married filing jointly. After that, you cannot make a contribution directly into a Roth IRA. However, there's smart tax people, and there's some called a backdoor Roth IRA, and essentially you make a regular IRA contribution and you immediately convert it. Do a Google search on the term backdoor Roth IRA conversion, and you'll be able to find out what to do. And then there's a supersized backdoor IRA conversion, which is basically taking like your 401k, if you're rolling that into an IRA and doing a conversion on that. So those are two terms to Google: backdoor Roth IRA conversion and supersized backdoor Roth IRA conversions. And as long as you're doing Google searches, I recommend you also do a Google search for a fee-only financial advisor. They can give you more details on how to do this, and they can work with you on your situation and whether it makes sense for you. Again, this isn't financial advice for your situation. It's just educational. Okay, so how do you get there? How do you get to $1 million in your Roth IRA? Well, if you look at the limits, right, $6,500 a year that you can put into a Roth IRA, you know, it really doesn't take any magic. If you assume that you're going to get, let's say, about a 9.5% return, which is a healthy return, that's going to be a volatile portfolio, right? That's essentially 100% in the stock market. And so you're going to see a lot of volatility in that. But you know what? Over the course of 30 years, and time is on your side if you've got 30 years, and even if you're 50 years old, you know, if you've made it to 50, for men, our life expectancy is in our low 80s. So you still do have 30 years, and it turns out Roth IRAs are great estate planning tools. You want to talk to an estate planning attorney, but there's several really nice advantages to, you know, if that's money that you leave to your kids, if you're planning on leaving any inheritance, that can be very tax advantage for your kids. So talk to an estate planning attorney, talk to an accountant, and find out more about that. But if you're 50 years old and you're in good health, you know, the statistics say you've got about 30 years left. I will say this though, there's a difference between health span and lifespan. And so the main theme of my channel is sharing with people. I want people to be thoughtful and deliberate about when they retire. My goal is to reach 10 million people with that message, that simple message. And the reason is because once you're 60 years old, like I'm going to be 60 here in less than 2 years. And at 60, you know, I likely have less than 1,000 weeks of healthy active time in front of me. So if you're in that, if you're close to my age, I just want, you know, that's really why I do this channel, is you just give people a warning to be thoughtful and deliberate. And you know, there's no one answer for everybody, but let's jump back into the Roth. Okay, if you get just a little bit over a 9.5% return, just putting in that minimum, the $6,500 a year, you're going to get there in about 30 years, $1 million Roth. If you get 8%, it's going to take you about 34 years to do that. And if you get 6%, it's going to take about 40 years. But you know what they say about planting a tree, right? The best time to do that was a decade ago. The second best time to do it is today. So no time like the present. If this sounds like something you're interested in, talk to a fee-only financial advisor, talk to an accountant, and see if it makes sense for your situation. And let's get you to $1 million in your Roth IRA. And I think that's maybe why millennials are putting 75% of their retirement contributions, according to Fidelity, into Roth IRAs, because they're hoping that someday they'll be part of that 300 billion, billion with a B, not a T. It's still a lot of money though, that have account balances of over $5 million. They've got that ambition, and if you have an ambition to learn more about retirement and making the right decision for you, I know you're going to enjoy this video up here that talks about the average income in retirement, and this video down here that talks about 5 reasons to retire as soon as you can. Thanks for watching. Bye-bye.